This is Market Bytes, where we give you 3 things to think about when it comes to markets. This week is all about economic stimulus, real yields, and crypto hedging. Economic stimulus. To kickstart their economies, central banks and governments are flooding money into their countries. In Europe, that means Christine Lagarde has been recharging her money printer and is now telling the European Central Bank to buy more bonds, funneling as much as 20 billion euros a week into markets. In the US, Joe Biden has passed a $1.9 trillion stimulus package through Congress, with $1,400 checks going to millions of Americans in the hope that reviving economic spending will help economic growth and protect jobs. Donald Trump's stimulus helped raise monthly spending by 7.6% in January, so Biden will be hoping for a similar boost. Real yields. Everyone in markets is talking about the rise in US Treasury yields, which are a barometer of America's borrowing costs. As economies recover, inflation expectations go up, which can encroach on bond returns and push up borrowing costs. One such measure sees it hovering just below the highest level since 2018, just a year after falling to a record low. So investors are increasingly looking at the real yield, which is the return they're getting on their bond investments but stripped of inflation. In essence, it's a clean number. The more inflation rises, the more investors will be looking at this figure to help them understand just how much bang they're getting for their buck without the inflation noise. Crypto hedging. Could Bitcoin be used to hedge inflation? Some of its supporters are saying it could. With concerns that economic stimulus and recovery will drive up inflation, investors will usually hedge against it by pouring money into assets like gold that have a limited supply. Bitcoin, the cryptocurrency that's currently trading around $55,000 per coin, is designed to have a fixed supply, which means that unlike the dollar, it can't be devalued by a government or a central bank distributing too much of it. More institutional investors are coming out to back Bitcoin's ascent, but crypto assets haven't been around that long, and their volatility is still a major concern. That's it for this week's edition of Market Bytes. I'm Todd Gillespie. For more market insight, make sure to follow us on Quicktake and Bloomberg.